Hey everyone, Attorney Andrew Bethel here from Bethel Law, where I help you navigate estate planning, taxes, and real estate without losing your mind or your money. And today, we need to talk about the so-called One Big Beautiful Bill working its way through Congress, at least at the time of filming. Because whether you love it, hate it, or still trying to figure out just what exactly is in it, this monster of a bill has massive implications for estate planning, taxes, and generational wealth. So hit the like button, subscribe, share this video with someone who's thinking, I'll deal with sorting my taxes and estate out later. Might not have a later. Let's dive in. So here's the big headline. Under the current law, the estate and gift tax exemption is at a historic high of $13.99 million per person. But it was never meant to last. Starting in 2026, it was scheduled to drop down to about $7 million per person unless Congress did something. Well, now they might. The House version of the One Big Beautiful Bill, yes, that really is the name, proposes raising the exemption even further to $15 million per person or $30 million for married couples starting in 2026 and then adjusting for inflation from there. That means that so long as an individual decedent's estate is worth less than $15 million, which of course most of them are, then no estate or death taxes will be owed. Doubling that to $30 million for a marital estate where couples can even give their unused portion of the $15 million personal exemption to each other, and, well, you have a tax break for literally only the wealthiest of the wealthy. Sounds great, right? Well, I suppose there is a little bit of a twist. The Senate version says, not so fast, they're holding off on locking in that $15 million, meaning if you're one of the 0.02% of people actually banking on that increase, then don't, or at least not yet. And if you've been waiting to do any gifting or trust planning, now's the time. Because if Congress doesn't act, your estate could lose millions of dollars in tax protection overnight. Moving on, here's one you might not have heard about, the new surtax on big capital gains events. The capital gains tax structure would stay the same for most people, but if you're selling a business, exiting real estate, or cashing out $1 million of investments, you could be hit with a capital gains surtax, essentially a mystery tax, still being debated in the Senate, but clearly aimed at big liquidity events. This is the kind of tax change that sneaks up on families who have spent decades building equity only to get hammered when they finally sell. So if you've been thinking of selling before retirement or moving abroad, talk to someone now. You might want to accelerate your sale, defer some gains through installment plans, or look at charitable trusts, because the difference could be hundreds of thousands of dollars in taxes. Now, let's discuss some acronym taxes. First is AMT, or Alternative Minimum Tax. The House wants to keep the higher exemption amounts set by the 2017 tax cuts, giving high earners more breathing room. The Senate is softening on it a bit, but not eliminating it. So if you've ever had to juggle ISO excises or large deductions, this change could open up some estate planning options. Next is QBI, or Qualified Business Income Deduction. If you own a pass-through entity like an S-Corp, LLC, or a sole proprietorship, the deduction bumps from 20 to 23%. But beware, if you're a high-income service professional, the Senate adds new limits, so don't assume you qualify. You'll need to check the fine print once we actually know the text of the bill. And lastly, but very importantly, for us in higher tax states like California, the SALT deduction cap. The cap on state and local tax deductions is proposed to raise from $10,000 to $40,000 for joint filers, but begins to phase out at around $500,000 of income. Great news for high earners in states like California, unless you're too high of an earner, but in that case, congratulations. Going further, let's go over some more surprise updates. Bonus depreciation is back. 100% immediate expensing for qualified property placed in service between 2025 and 2030. Great for businesses looking to front-load deductions or prep for a sale. The international revenge tax. If you've got assets in offshore entities from places like the Cayman Islands, the IRS might hit those with a new 20% tax. It's aimed at foreign entities, but if you're a US citizen using offshore structures, this could affect you too. Newborns get MAGA accounts. Yep, that's $1,000 government-seeded savings accounts with optional $5,000 annual contributions from the parents. No word yet on whether there's a penalty for early withdrawals. 529 plans expand to cover more education types, including homeschooling expenses. And car loan interest deductions may be on the table, but only if the car is assembled in the US. Oh, and by the way, solar and EV tax credits are gone, but nuclear energy incentives stay. So if you were hoping to write off that new solar install, the door on that is probably closing. Keep in mind, whether this bill passes exactly as written or gets chopped up in reconciliation or down in the House, the themes are clear. Wealth transfers are tightening a little bit, big liquidity events are being targeted, and complex planning is becoming the norm. So if you have real estate, a family business, investment properties, or a net worth approaching 7 or 8 figures, it's time to act. This could be the last best moment to lock in today's rules. Waiting until 2026, you may need to find that the tools you need are gone or cost a lot more just to use. So, what's your take on the big beautiful bill? Smart tax reform, political stunt, something in between? To me, sounds like it's mostly targeting people at the top with some tax breaks, but with some new hoops that they have to jump through. However, let me know your opinion down in the comments below. And remember, if you found this video helpful, please be sure to like, subscribe, and share the video with someone else who thinks estate planning is something they'll get to eventually. I'm attorney Andrew Bethel, and I'll see you at our next meeting.